communities on Tuesday the 1st of February. The meeting is open to the public. Members, welcome. Members, I'll now advise you who's in the room and who is attending via Starlife. So in the room is myself, Kelly Armstrong, Ciara Ferguson and Paul Frew. And online we have Andy Allen. And who else is there? I can't see it on screen.
Anya Murphy.
Anya Murphy.
Did you say Andy Allen?
Andy Allen, yes. We have apologies for lateness today for Stephen Dunn and Paula Bradley, who will be attending as soon as they can get free to get here. Just to remind members of the requirement to declare any interest that they may have in relation to items under discussion today. So just moving forward then, I'll leave the chairperson's report until Paula gets here, because it's relating to business that are related to her if she has any. But just then, members, if I could take you to page 5, that's the minutes of the previous meeting, on the 25th and 26th of January. Are members content to agree the minutes of the 25th and the 26th of January as drafted?
Agreed.
Agreed. Agenda item 4. Committee deliberations on the support for mortgage interest, etc. security for loans bill. Members, you've been provided with a copy of the delegated powers memorandum for the bill in your tabled papers. Members, are you content that a copy is now forwarded to the ESR for comment? Agreed, thank you. Members, the committee started to discuss the bill last Thursday with the officials and will now continue its deliberations on the support for mortgage interest, etc. security for loans bill. This is not yet the formal clause by clause stage. Claire McCanny from the Bill Office is available to answer any queries from members. A copy of the bill is at page 21 and other papers start at page 34. Are members in agreement to proceed?
Yes.
Thank you. Members, just to remind you that any questions or comments should be focused on the specific clause under discussion. If members are content, they will make a start, and welcome to the meeting Una McConnell and Hayley Ward. Thank you very much for coming along. Folks, well, we have the clauses here, but we also have departmental response that has come through from yourselves. So will we start then with the clauses and then move to the letter, or the other way round would be best?
Well, the response is really around clause 1, which is the key clause of the bill, Chair. So we just maybe go through the response.
Yeah, we'll maybe turn to your response to the letter that has come through to the committee on the 31st of January, if you don't mind, Una and Hayley. If you want to take,
no problem.
That's brilliant, thank you. If you want to take us through that response, that's probably the easiest way forward.
Okay, well, the first question was the process for adding or removing charges. The committee requests that you confirm in your response the process for paying the Smi Loan, and also describe the process for removal of a charge on a property and the timelines involved. I suppose this is really operational process, and when we were drafting, unfortunately, we had some staff illness on Friday, and I was in a training course, so we didn't really have an awful lot of time to respond to this. But I do have the loan management guidance about how to take off a charge, you know, and I suppose really it's once full repayment of the SMI loan has been received or a decision has been taken to write off the outstanding loan, the charge is removed. The approval to release the charge requires a signature from the grade 5 and inclusion of the departmental seal, and then completed release forms is received from the customer solicitor, and then it's forwarded to a grade 7 for approval. So there's a few steps to take on, but it's sort of, you know, some of it's done on the system as well. But I think the thing is that, you know, we are very efficient and we do try to do it as quickly as possible, you know, and so it wouldn't hold up any sales. So that's I suppose is the first question. I can send you the extract from the departmental guidance if you want, on how to do that, if that would be helpful.
I think it would be helpful just for us to have on file. As you say, it's operational, so it wouldn't be on the face of the bill, but it would be useful to have, yeah.
Yeah, okay, I'll send that to you after the meeting. Set times for adding a charge to the register removal would be useful. I think we've sort of said that we're going to fully consider the subordinate legislation and operational processes for the registration or removal of statutory charge once Royal assent to the bill has been received. Our initial findings that taken and placing of a charge and taking a charge off shouldn't hold up any sales. We do try to act as quickly as possible, but it does involve third parties such as solicitors and land registry. So I'm not sure if we would want to put a charge or a time scale on the regulations. But, you know, this, I suppose we'll be coming to you again with the SL1 for these regulations, and I suppose we can consider it a bit more then. Okay. The query about joint ownership, the SMI loan pays interest on existing mortgages. Any event such as transfer of legal ownership or death will have an impact on the mortgage, as well as acting as a trigger point for consideration to be given to repayment of the SMI loan. For example, in separation, it's common that either the house is sold or remortgaged. So I think the point, you know, really is that the SMI loan always comes after a mortgage. So, you know, it's not that the SMI loan is going to cause someone to lose their home or anything. I suppose if you're getting into difficulties, the mortgage is the main charge on the property. And I suppose we're always going to be following after that. So then the scenarios about an SMI loan. Well, there was a couple of questions here. I suppose default event for the purposes of loan is the sale, transfer of property or death of a benefit. So, or the death of the benefit claimant, sorry. So as we use an example of primary person B moving in, the primary mortgage provider will need to be aware. So I think it's not, we don't consider that anyone would, if a time you're coming to an SMI loan, all people should, who own the property or have a mortgage on the property, should be aware that there is an SMI loan going to be taken out, and therefore there will be a charge, and therefore there will obviously be the repayment of the SMI loan in the future. So we're saying, I think here, death is a trigger point for possible repayment of an SMI loan, but someone going into a care home and then the house is sold would trigger a repayment of the SMI loan. But if the person goes into the care home and the home isn't sold or transferred, we wouldn't be seeking repayment of the SMI loan. And in establishing sufficient equity, each case is considered separately. Extensive evidence is required, which includes the market valuation, the mortgage redemption statement, and evidence of any other priority loans to ascertain if any equity is available to repay. You note that the bill doesn't actually affect any of these default trigger events. So, and it should be noted that the primary mortgage for whom the department is paying the interest will be repayable if mortgage payments stop, and the primary mortgage debt will be much greater than the SMI loan. So in case of repossession, the department would need to confirm if the primary mortgage company will ever seek repossession. So the transfer of an SMI loan, we did have some consideration of this on Friday, and I think it's something that we would have to look at in more detail when we're doing the porting of the SMI loan. The benefit of porting an SMI loan to another property is it gives somebody with an SMI loan who's had a change of circumstances, maybe they've had a bigger family or there's a disability and they need to move home to, you know, accommodate something that's happened in their life. They don't have to use some of their equity to pay off the SMI loan, so they'll have more to go and buy them more of a property. But transferring the loan maybe to another person, we'd maybe need to take more consideration of that, because there's a possibility that the loan might never be paid and it would just be transferred and transferred and transferred. So we just have to give a bit more consideration to that to see, I suppose, how we balance up flexibility and protecting public money.
Can I just check on that?
Sorry.
Can I just check on that? So when these SMI loans are taken out, are they not taken out for a fixed period of time?
No.
No. Okay.
No.
Yeah, pull through. Just
on that question, it's very interesting. So I get the point you raise with regards to transferring and perpetually transferring across to different persons in each family. But surely, just because the loan is transferred, you still have to, obviously you still have payments to be made. So even though it is transferred maybe more than once, the payments will still continue. Is that not correct?
Well, it would depend. Maybe the person who has the SMI loan out has maybe died and transferred the property to somebody else, and then if you and they may not need help, they may not need an SMI, they may have got the property mightn't have a mortgage on it anymore, or they might have had to take out their own mortgage and be able to pay it, so the debt would just be sitting there. So you're just transferring the debt, passing it along and not making it be paid. So the SMI loan might have stopped paying out. You know, it won't be paying the mortgage, but it's still sitting there, and we would only seek to recover that on the death, transfer or sale of the property. So someone who gets an SMI loan, if their circumstances improve, they'll stop getting the SMI loan. They'll probably start making their own mortgage payments, but we wouldn't be seeking to recover the SMI loan until they sell or transfer or die, and then we take it from the equity of the property.
So this isn't like an ordinary loan you'd get from the bank where you pay interest payments?
Well, you do pay interest, but so there is interest building up on your loan as it's sitting there and not being paid.
So is there not
but it's not.
Is there not like a monthly payment or a seasonal payment?
No. We're paying the interest on the person's mortgage so that they don't lose their home.
Right, okay, yeah.
Is that okay?
So really what you're saying is that no one has a payment plan from SMI. It's only recovered at the sale of a property or the ending of a mortgage.
Yeah. Not even the ending of a mortgage. Well, if the mortgage ends, we don't need to pay the I don't know. We're only going to be paying off the interest, so I don't think our SMI loan's ever going to clear somebody's mortgage. There's my door. So we would pay the interest, and then if that person, say, isn't eligible for SMI anymore, they'd maybe have to start taking on their mortgage payments again. But the SMI loan that will just stay with them until we pay, and interest will keep accruing on that until then we seek to recover it. And I'm going to have to go and answer my door. Hold on. I'm sorry. Apologies.
No,
You're all right. So it's an interesting one then, because I'm trying to, maybe tease this out a bit more. So what happens if somebody comes to the end of their mortgage?
Right.
You know,
nothing happens.
Nothing happens. So they
nothing happens. We don't seek to recover the money unless the property is sold or it's transferred. So if I give you an example, somebody could get an SMI loan now for 2 years, and then they find a job or are able to pay it back. That loan could sit there for 20 years until they die or they sell their house, and then only at that point will we recover that loan. So there's no payment plan set up in the interim of those, or in that 20 years for that period at all, unless they wish to pay it back themselves.
See, that's where I maybe had this confused in my own head when it was that period of, you know, they'll take out an SMI for the 2 years. So they're taking out the SMI to cover their interest payments for a 2-year period. The cost of that then isn't repaid back until the trigger point. And then the other thing about the transfer of the loans, at the moment, even if the transfer of the loan was permitted and there was a way found to do that, am I right in thinking that the person who the loan would be transferred to would still have to qualify for an SMI, in that they would have to have the qualifying benefit, still be on, or they would need to be on one of the qualifying benefits? We couldn't just transfer it onto someone who didn't need it.
Well, we don't know because we haven't thought that much detail about it. I don't know if you'd have to just transfer it to someone who's eligible for SMI, or
otherwise
you just transfer it to the house. Yeah.
Okay.
Can I ask then, just on that, because this is probably a missing link that we never really thought about last week, so this is very, 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 very useful. So is there flexibility there that someone with an SMI can pay it back before a house sale or mortgage?
Yes.
So they can pay cash, they can pay a lump sum to the department?
Yeah. They could even pay, they don't have to pay it all off in one go. You could pay it off, you know, I think you have to pay the minimum amount's £100, and then you could pay it off. Yeah. So
in a sense, whilst you're saying that there's not a payment plan, because it can just sit there as a debt until there's a movement in the house, transfer of the house. in a way you can, if the loanee wants to, they can place themselves into a payment plan.
Yeah. So I suppose
Yeah,
it's on the side their
pay it off.
circumstances. Their
Yeah, they can
circumstances
decide to
change.
pay.
Yeah, so I can get that. So somebody's income changes for the better, or maybe a well has matured or something of that nature. So they come
finish their mortgage payment.
come into money, or so there is a change in a circumstance for the better. And well, if the loan's of a small amount and it's just sitting there, it probably will just sit there. But if somebody was minded to pay it back, maybe they had a conscience whereby they didn't want any debt over their heads, then there is a flexibility there to pay that back in a payment plan. So if there was a payment plan in place, but then something happened and that person then maybe died halfway through a payment plan, is there ability to transfer that to a third person?
Not at the minute.
Or
No.
but
So-
is there merit in transferring that to a third person, or is it just by that stage you're probably down to a minimal couple of thousand, and then it's just through the transfer? I'm still worried about a scenario whereby a house is transferred to a loved one, but the difference of that, the payment of that loan could mean the difference of someone enjoying that property or having or being forced into only one option, and that is to sell.
I suppose, well, there's a couple of scenarios. I suppose you could be transferring the property and there may be mortgage debt on it, and the mortgage company is going to be coming probably looking for that mortgage debt. So we would be following after that. So the person may have to take out a mortgage of their own to take that property, and maybe that mortgage could cover the SMI loan. Maybe the SMI loan's the only debt in the property, but there might be other money in the estate, though the SMI loan would only come from the equity of the property. I think it is worth exploring more, and I think we could come to do that whenever we're doing the porting regulations.
Yeah.
It's just, this is really, it's not going to impact on the bill if we decided to do it or not. It'll have to be taken forward when we're doing the porting regulations. And I think we could make the commitment to come and speak to you about the porting regulations to make sure if there's any other flexibilities that you'd like to build into SMI, because there's so many different scenarios, I think, to work through in this issue.
No, I get that. I get that. I know we're looking at in the future here with regards to subordinate legislation. I get that, and it doesn't really impact on the bill. So yeah, I understand that. It's just I suppose for us to understand the bill better, it's helpful to have these discussions, even though they are futuristic and designed for the future, because it's just making sure that we cover off all angles and make sure there is the flexibility there, so that no one person is disadvantaged because of somebody else's loan. I suppose, even though they would have the advantage of getting property through a will or through a transfer, you want to allow flexibility there and not have someone put into a position where they have only one course of action. I suppose is what I'm getting at. So no, this has been very, very useful, and we are learning every day of committee. We're learning more about this, so thank you.
And I think it's worthwhile just when we look in the response that has been given, the time scale for regulations. It says once the bill receives royal assent, it's intended that subordinate legislation will be made within 6 months. So there's not that much time to think about all those scenarios, but there is time there.
No, but once we get this bill through, we'll be working on the porting regulations, and we'll be giving it some thought. We know we will be giving a lot of thought. And we will come to you again.
And just then moving on for the rest of that, so you've talked through the transfer of the SMI loan. What about the debt decision? Just give us the update on all of those.
Okay, well, I'll just find the right of sorry, it's number 20, it's there, I'll share this with you as well. There's a write-off procedures contained within the loan management guidance. DFC can only write off an SMI loan balance if the amount of equity available is less than the amount due to be recovered after all higher priority debts have been paid. So they give an example here. For customers in SMI loan of £10,000 when the property is sold, the equity available after clearing the prior balance is £8,000. DFC will recover the £8,000 and write off the balance of £2,000. And if there's no equity in the property, DFC will write off the whole amount. So I think there is a process. So there's obviously delegated approvals within decision managers, and they can write up an EO2 could write off a debt up to £100, 101 to £1,000 would be an EO1, and 1,001 and above is the decision taken by a staff officer. But there has to be sufficient evidence to make this decision, and at times, you maybe engage with land property services to, find out what the market value of the property is, and issues like that. So that would be the write-off covered. Then now there is an appeal process on whether you qualify for an SMI or not, but there isn't an appeal process in place regarding the write-off of or the repayment of a loan. The 39 weeks, 9 months before they can be receiving an SMI loan. Well, there's no waiting period for people who are in receipt of state pension credit, and the qualifying period is in place because it's reasonable for homeowners to make arrangements with their lenders to manage any loss of income for a short period without the need for the department to intervene. And we are constantly reviewing social security policy, and I think this is one of the areas that we have sort of began looking at ourselves within the department, and it's something that we will be looking at if this could be reduced in the future. But there's a lot of different factors to consider, with the party and the computer systems and operationally if we can do it, and what it would cost. So universal credit and future pensioners. This is another issue that we're going to have to look in, because you're right, the will move to UC will possibly be starting next year and finishing, I think, by the end of 2024 or something like that. So there is the potential that, yes, people will be moving who could work and get in JSA, and then because the zero earnings rule and universal credit won't be able to apply for SMI. But I think I may have read somewhere that with the taper rates and universal credit and work allowances and whatnot, they will still possibly be better off moving to universal credit and working. And then fewer pensioners. We did have a bit of a discussion about this, and we thought that there wouldn't be that many people possibly on pension credit getting the SMI. I think our thoughts are that most mortgage companies don't really lend to people past their pension age. So, and I suppose, and I suppose if they're not on pension credit, I suppose they're better. If they've got an occupational pension, I presume they would be better off than someone on pension credit.
It's just,
but it's another issue we'll have to look at in further detail.
I think with the building boom that's due to come up, because we know that there's an intention for the construction industry to increase the number of houses that will become available in the future. If that's the case, then we normally see a downsizing, when people are heading towards retirement and changing houses. So it's the fact that people have had to have workplace pensions now. Unless they opt out, they will have a workplace pension, but it's just that you see with the 0 hours, there'll be more people working as pensioners going forward than there ever has been before. So it's just to make sure that there's some consideration. I think what the worry would be, especially with the move to UC, is there will be people who may have an existing SMI, and will they still have it after the move to UC if they're working on the legacy benefits and then they're put into UC? Will that SMI be triggered, or I'll have to repay it, or you know, they'll stop being able to be in the qualifying period for SMI?
They won't have to repay it. They wouldn't be, their SMI loan payments would stop, and they'd have to probably just go contact their mortgage company to discuss maybe making payments on their mortgage.
Is there
Not
no...
be right, Hayley?
Yeah,
Is
it would
there-
stop.
Is there any consideration being made by the department, excuse me, under the transition, what's it called? Is it Transitionary Protections? So if somebody's moving from a legacy benefit onto universal credit, that there's a protection period in place there, that they are not worse off by being forced to move. So it's a mandatory move as opposed to an optional move. Well, it's not even optional.
Yes, there's transitional protections put in place when you move to universal credit, and I think it means you won't be any worse off once you move to universal credit, though there is it erodes over time, you know, so, but SMI loans aren't included in that.
And there's nothing in that is that being discussed within the welfare mitigations or anything? Because it means then if somebody, excuse me, is having their interest paid for them, and then we are moving them onto UC and effectively taking that SMI, you know, the interest payments from them, then they are being negatively impacted by UC. Is there any way that could be considered as a mitigation? I don't know whether that's been brought up to the panel as yet.
It's not. It's not being considered by the mitigations review, as far as I'm aware, and I don't think it's really been considered as part of move to UC, the impact it'll have on people who are getting SMI loans.
The universal credit work allowance is much higher on universal credit compared to legacy, so it'll kind of offset an awful lot of what they'll be losing in their SMI loan, compared to what they'll actually be receiving their universal credit taper. It is something that we can look at as part of it, but it's not part of the transitional reg to UC at present.
No.
So if somebody's working 12 hours and they're moved on to UC, but UC says you're 0 hours, so they'd still be working 12 hours. You're saying that the work allowance is greater. I don't know whether it would be that great, but you think that would balance out?
They get to keep more of their earnings.
I wouldn't imagine. Yeah, they get to keep more of their earnings. It probably, but without actually looking at the figures, it would be hard to give you an estimate of how much better or worse off that they would be. But it would offset slightly the work allowance compared to legacy.
Okay. Do you want to go ahead? Oh, sorry. And just checking round, any other members want to come in on any questions on the letter that we've received? I can't see the screen there to see nobody's saying. Oh, I think we've got all our questions there. So I'm just going back to, so we've heard back from yourselves about that response. Is there anything else missing out of that response? That's everything covered, isn't it, that we wanted under clause 1?
Yeah, well, I think we've answered everything there, haven't we?
Okay.
So,
thanks for that then. So then, just moving then on to clause 2, the commencement and the short title. Members, there were no issues or comments raised on clause 2 at the meeting on the 27th of January. Members, have you any other comments on that clause? Or Una or Hayley, do you have any comments on that?
no.
Okay, no problem. I think that's everything we have on at the moment. Thank you very much. What we'll do now is we'll go into a closed session with Claire McCanny from the Bills office, as we always do, just to discuss the bill. But for now, guys, thank you very much. We may not see you soon. We might be all okay because you have given us quite a lot of information. But if we do, we'll get back in contact with you. Thank you very much.
Right, thank you.
No problem.
Thank you very much.
Members, we're going to go into closed session for a short period of time.
Chair, do you want to do agenda item 5, date, time and location of next meeting? Apologies, I should have put that first.
Sorry, just before we go into closed session then, date, time and location of next meeting. Next meeting is this Thursday, the 3rd of February at 9 o'clock in room 29. But we'll go into closed session now for a moment. Thank you so much.
Committee room 30.
Good if we can bring Hayley and Una back in again. All right, good to have you back with us. It's Paula here. We had a chat there in closed. We had a chat there in closed session. So there's really only one issue, though it does go through the entire order, and that is the issue around negative resolution. So the committee would be minded to have a look at this stage at how we could change that Article 13 of the order then around to draft affirmative, just to allow future committee to have proper scrutiny given some of the issues that were raised earlier. Anything that you could, any comments on that, Una?
So you want to, on the bill, sorry, let me just get up here. So you want to make the regulations, see, the bill's only making regulations to allow a statutory charge to be put on a property, and you want to make those regulations draft affirmative. I don't think that would actually allow you to have scrutiny of all the other changes that you're making, because the changes to SMI that you're requiring doesn't really impact on this bill. You know, it's just made using other powers that we have that are already in the bill. Isn't that right, Haley?
Hold on.
You know, porting and the qualifying period, we can make regulations for those already.
Okay, bear with me. Una, Paul, did you want to come in?
Yeah, so having went through the old 2016 order, I realised that most of the enacting legislation is all negative resolution. All the articles, most, if not all the articles, are all negative resolution. So I get that's the type of bill we're dealing with. But on your particular question, really, it would be what we would be, if we were minded to do this, what we'd be talking about is amending Article 13(9), where it says regulations under this article are subject to negative resolution. So it would mean then that Article 13 in its entirety, and then also with the amendments in this bill, would become affirmative. As far as I'm aware, now that's me going from my primitive thinking of over the last couple of hours. So I suppose that's the question for you: is how would us amending, or how would an amendment of 13(9) to affirmative resolution as opposed to negative resolution, how would that impact on the 2016 order and this new bill?
I think I'd have to go and look at it.
Yeah, I think it's something that we would need to go to OLC about.
Yeah.
And DSO.
Yeah, and I'm mindful we're raising this with you now, so yeah, I have no problems with time scale. You know, I have no problems with you needing you not giving us an answer today. I suppose I would say that we're tight for time with regards to the scrutiny of the bill, but it's just a query and a question we have at this stage.
Claire wants to come in on this.
Okay, can I just bring, sorry, before going, Claire, can we bring Claire in? I know she wanted to ask a question.
Yes, just checking then. So if they were to make, say if they were to make, and I take your point about the regulations under Article 13 and the bill really only applying to paragraph 7C and the new paragraph 8A and 8B, but would it be possible to check with DSO and the OLC with regards to changing those parts of the Article 13 to draft affirmative, possibly, given the limited time the committee has had to look at the bill itself. But we could even follow that up in closed session committee if you wish afterwards.
Yeah, well, we'll need to go back and speak to OLC and DSO about this,
that.
and we'll come back to you as soon as possible. You know.
No, look, that's no problem. Did any other member want to say anything further? I think that's pretty much everything's been said. I suppose we just wanted to get it on the record with yourselves, Una and Haley, just to let you know that the committee might be minded to look at this, but if we can ask you then to go off with that information, and then you can come back to us with a response. Is that okay?
Yes, that's no problem.
All right, okay. Members, then we're going to then, if members' permission, I think we're going back into closed session again, if Claire wants to hang in there, and we'll say cheerio to Haley, or to Una and Haley, and thank them again for their time. Thank you.
Thank you very much. Bye-bye.
Okay, bye. All right, members, we're going to go back into closed session again, okay?